Hi everybody, welcome back to another video. If you have noticed, REITs prices in Singapore has dropped in recent months due to various events, and one of the main highlights is because of higher interest rate. If we look at the S-Reit Index chart, the 5 years duration do not actually show a very good trend. Ever since recovering from the 2002 lows, they have actually been on the consistent drop ever since reaching a high at 2021 when the interest rate was still at a very low level. Ever since the Fed started increasing, they have been constantly dropping until the lows of today, which is quite near the lows at 2020 COVID times. Of course, the main reason for the results of the lower REITs prices is because most of the REITs had their dividends cut due to various individual reasons. In this video, I would like to focus on the recent results of Keppel DC Reit and Fraser L&C Trust. I will talk about the issues or concerns that they are facing and would be facing in the upcoming quarters. As most of the REITs have their share price dropping, Keppel DC Reit is not to be spared. Keppel DC Reit also have their own issues, and that is because one of the main issues that they are facing is regard to their tenant making payments. In the recent years, Keppel DC Reit had been facing with these kind of issues. The one that was recently solved was in March 2022 when one of the tenants, DXC Technology, suddenly gave up their space and refused to pay for them. Keppel DC Reit had to bring them to court in order to solve this issue. Luckily, right before the trial, they have actually managed to come into an agreement. Therefore, the tenant has decided to pay 13.3 million to the REIT's management. This is good because it saves on the legal fees required to fight for this case. However, Keppel DC Reit is facing another tenant payment issue, and this one is much bigger. That is the tenant in the 3 Guangdong DCs in China. Keppel DC Reit had previously dropped a bombshell mentioning that this tenant alone has not been paying the rental fees, and that has been accumulating throughout the period until to the current point of 5.5 months. This case is quite interesting because previously the tenant was the ex-owner of the data centers. Keppel DC Reit had bought from them at 635.9 billion back in 2022 and leasing back to them. Now, the tenants themselves are unable to pay for it. With China being 7.4% of the AUM and 12% of the revenue, this will definitely have a short-term impact for Keppel DC Reit. With the management taking a softer approach, hopefully this case will be solved soon. Now let's take a look at their balance sheet. Similar to all other REITs, Keppel DC Reit cannot be spared. Property expenses and finance costs increased significantly by 85.6% and 43.5% respectively. Of course, these property expenses would not be that high if not for the Guangdong situation. As you can see, they actually have a loss allowance accounted for the uncollected rental income. Because of this, it has actually impacted the DPU by 0.649 cents. If we look on the brighter side, if not for this loss allowance, the DPU would have been 10.032 cents for the full year of 2023, which equates to a 1.8% drop instead of a 8.1% drop. Another risk is that their finance costs might continue to go up because they have debts that will be mature in the full year of 2024 and 2025. So expect once they refinance, the average cost of debt will go up. Of course, the debt issue is much smaller as compared to the China tenant payment issue. Hopefully, the management will be able to resolve this issue as soon as possible as it will be gating their distribution. Of course, the worst case will happen is Keppel DC Reit will have to kick them out and get new tenants, and that will take time for the new incomes to kick in. But with strong assets and strong sponsor, I feel that Keppel DC Reit in the long run will still continue to perform well. If you have enjoyed the video so far, please support the channel by hitting the like, subscribe, and comment on what you feel about Keppel DC Reit's recent situation. Thank you, and let's continue with the video. The next REIT that I would like to talk about is Fraser Logistic and Commercial Trust. Fraser L&C is another example where I'm afraid that the dividends might come in lower for the subsequent quarters due to 2 reasons. Firstly is their debts maturity, and the second is foreign currency risk. Fraser L&C contains a lot of very good properties with very high occupancy rates. However, the unfortunate thing is that with their properties majority focused in Australia, the currency weakening of the Australian dollar to Singapore dollar has not helped. Currently, SGD to Australian dollar have already reached near historical high of 1:1.15. As it gets higher, distribution from Fraser L&C will naturally continue to drop. This is also partially the reason why Fraser L&C has constantly been priced at a cheaper valuation and a higher dividend yield because of all these risks involved. Another looming risk is due to the debt's maturity that have to be refinanced soon for the full year of 2024 to 2026. If you can see from their chart, it's particularly concerned because a lot of the debts had to be refinanced soon within these 3 years. With the inflation data being so sticky, I expect interest rate to come down at a slower pace. Because of this, expect the cost of borrowing to continue increase for the next few years. This will result in the increasing of their finance costs and thus dropping the distributable income. With the refinancing of the new debts, the cost of borrowings will definitely go up while the interest coverage ratio will go down. The bright side is that with the S&P Global rating at BBB plus at stable rating, this meant that the debts are more easily available for them to get while getting it at a better rate as compared to those with a lower rating. Therefore, in my REITs tracker, I've actually catered for a negative 3.41% drop year over year in dividend. There are also other concerns as well. If you see for the financial year of 2023, their NPI and revenue also dropped slightly on top of the increase in the finance cost. The finance cost has also increased by 12.4% year over year. With more debts required to be refinanced during this period of time, I'm afraid that there might be an even higher increase in the finance costs. Therefore, although Fraser L&C is a good REIT with good properties, it does not always equate to higher dividend at all times. This is a prime example where overseas properties of foreign exchanges and the cost of debt maturity plays a big part in determining the dividend distribution by the REIT. With the expected drop in the dividend, their current yield at the current share price will be about 6.54%. In conclusion, from the two examples of Keppel DC Reit and Fraser L&C's recent results, we can conclude on these risks that most REITs would be expected to face as well. Firstly is the risk of tenants unable to pay for their rental income. Therefore, REITs with more tenants involved with smaller contribution individually will be able to take advantage of this. And that one example will be Mapletree Logistic Trust with major tenants average at 2% of their income. Next is the weakening of foreign currency against SGD. Foreign properties contributing income with weakening foreign currency will definitely have a lower distribution. Lastly, REITs that have debts maturing within these few years of high interest rate will definitely have a higher cost of debt as a result of the refinancing. With REITs prices being so low in Singapore, it provides us with opportunity to buy good and valuable properties or REITs at good valuations. Hopefully, interest rate will start coming down and REITs market would start picking up again. Currently, the projection is that there will be interest rate cut starting in June. So hopefully, REITs would still be able to hold on by then. But like I said, as the REITs prices get lower, you are buying it at a discount, which will get you a higher dividend in the long run. Thank you so much for watching. I hope this video has been informative for you. Please hit the like, subscribe, and comment on what you feel about investing in REITs in the current market. You can also watch my previous video where I talk about why Singapore banks are now performing differently as compared to the past, and what are the resilient and best REITs to invest in the current market. Thanks again, and I'll see you in the next video.